Well, I have to hand it to you.
Oh, don't hand anything to me.
Trust me, it is a begrudging handing it to you. But I can't deny, we were sitting here yesterday at this time, and you very clearly made the point that looking at NVIDIA's numbers, yeah, they were great for NVIDIA, but what did we learn in those numbers that justified the massive rally that we saw? And a few hours later, lo and behold, a stunning reversal.
I will go over my point one more time. Thank you for that. I appreciate that. Look, the point I was making is NVIDIA is doing great. You know, duh. You know, we know that. But it doesn't tell any of you out there anything about all those burning questions that we have about the ex-NVIDIA environment as well. It doesn't actually tell us much more about NVIDIA. We knew NVIDIA was knocking the ball out of the park. We know they had the moat for now. We know they have 75% margins on their chips. We know it's fantastic. But it kind of endorsed the story. So you either love NVIDIA or you don't, for its own merits. It didn't tell me anything about the revenues that can be generated from the hyperscalers. It didn't tell me anything about the decline in spending that capex that the hyperscalers are going to have next year and how that was going to affect their revenue expectations, and then when they're going to generate net income from it. It didn't tell me that every company out there that's investing heavily in AI is going to generate profits from that investment as well. So if you had valuation concerns beforehand, you really had them more so on the back of NVIDIA. Because in fact, if anything, if you look at the counterfactual, okay, NVIDIA's doing great, people are buying more chips, but we still don't have the answer. So they're buying more, but we don't have the answer here. I want to just come up from a different point of view, and I've just thought of this as I was speaking to you about valuations. There are two types of, first of all, let's assume, is the market overvalued? Well, look, you lot over there say yes, you lot over there say no. Okay, so let's just go with the overvalued camp for now. Bear with me on this one, and I know some of you think it's not overvalued. If it is overvalued, there are two types of companies that are overvalued. There are the ones that are great and are going to be here, and are going to generate vast amounts of cash, and we know they're going to hang around, and you know, we're not worried about them, but they're just highly priced. You know, the kind of big tech names or the ones that generate massive free cash flow, which they can pile back into, amongst other things, buying equity. So you've got the overvalued companies that are brilliant, and then you've got the overvalued companies that are rubbish. And my problem is, I don't think we're having enough of a wheat versus chaff split in those at the moment. So you've got the overvalued companies that are great, the overvalued companies that are just never going to make the kind of profits that they're promising. They're just not going to be there, so-called pets.com. Look, for instance, I think GoPro was a great device. I think the Fitbit was a great device. I think Alternative Meat, great idea. Alternative Milks, great idea. Ocado, the shopping company in the UK, great idea. But none of these companies has proven a sustainable profit path. And they didn't. So some of them are gone, some of them are still hanging on in there as well. So when you've got companies that haven't got a proven path to profitability, and are still massively overvalued, that's where the problem comes in the market.
Well, very clearly, it's early days when it comes to this technology, and investors are very humble about saying it's not clear who the winners and the losers are going to be, so we're just going to cast the net wide right now. I think the trouble is that even if you believe that we are in bubble territory, when you look at valuations across the board in the tech space, something has to pop the bubble, and you don't necessarily want to cash out too early because, as we've seen so many times this year, the rally can run on. And I would say right now, when you look at the market, what was the catalyst for the sell-off that we've seen? Was there a distinct catalyst? Maybe the fact that we've seen this massive plunge in Bitcoin, and that's impacted the liquidity of many shareholders that have cross stakes in a lot of these tech companies and in Bitcoin. But I think just because you believe we're in bubble territory doesn't necessarily mean it's time to sell your holdings or to short the market. And maybe yesterday what we saw, that early rally, was short covering because the numbers were so good, but not actually a change in sentiment.
I do not call the market. I see what I see. And I'm not saying the market's going to go down from here. I'm not saying the market's going to go up from here. But if you thought the market was great value when the Nasdaq was up 2%, you really think it's good value now. So presumably you're back in, unless you have liquidity problems, unless you have other issues as well. And that's the other point. A lot of the dangers in the market, the reason why the bears make such brilliant reading, you know, bears make sense, bulls make money. The reason why they make so much sense is because there are so many other factors to worry about. You can look at consumer confidence on both sides of the Atlantic. You can look at the K-shaped recovery, something you've talked a lot about. You can look at the travails that President Trump is having in the polls and indeed on the most recent elections with getting across his message that we don't have inflation in the States. But then he takes off the tariffs on bananas and a whole host of other products. So there clearly is inflation. Americans are telling me there's inflation. They can feel that inflation. So there's macro issues. And then we came to that jobs report, which I don't blame our team, by the way, for saying was a strong report. But it wasn't. It was a very mixed report as well. Headline figure, much bigger than expected, but also unemployment rate up higher as well. So I think it was nuanced, and that clouded that December rate decision. And then that brings us back to the valuations. if we're really worried about the debt profile and the credit profile and the leverage profile of both investors and the companies, then we're really worried if rates aren't going down.
Yeah, I think that's absolutely key. And when you think about whether now is a good entry point, even with the NASDAQ now down more than 2% yesterday, you have to ask what's going to be the catalyst for further gains this year if we've got a Federal Reserve that now looks it looks very unclear whether they are going to cut in December. NVIDIA earnings are behind us. So what's going to be the positive catalyst that drives markets from here? And on that point, I would just throw out there, to your point about President Trump and the pressure he's now under from a support perspective from voters, I wouldn't underestimate the administration's ability to come up with creative solutions to bolster confidence. We've seen it time and time again this year. I don't know what that would look like, but we have seen this administration very keen to intervene.